Happy Monday, everybody. I hope you had a great weekend. Today is May 9th, 2022, and this is your very important Monday market update. Seems like I say a lot of this lately, but wow, what a week. First of all, I hope all the mothers had a great Mother's Day. Now, with so much to cover, let's jump right in. Going into Monday, the first trading day of the month, we were licking our wounds from another ugly Friday in the market. Starting the week, let's review where we were. For the year, the Dow was down 8.7%, the S&P 500 was down 12.9%, and the NASDAQ was down 21% for the year, even more from the November highs. Best sectors of the year, energy was up nearly 37% for the year, consumer staples up 1.5%. Yes, the second best performer of the year was up 1.5%, the third best, utilities, up 0.3%. The worst performers, communication services down 25%, consumer discretion down almost 21%, and information technology down 18.7%. The 10-year Treasury also down 11% for the year on price, 2.9% in the yield. Okay, the stage was set, the show must go on. On Monday, the stocks opened flat and chopped sideways for a bit. Most of the morning, midday, there was a bit of selling that came along with the 10-year Treasury yield breaking above the 3% for the first time since 2018. Stocks set new lows at 2:30 Eastern. There was a late day relief rally that had the S&P 500 close on the highs, up just 0.5%. Dow up 85, NASDAQ up 200 points. Tuesday, we had markets open slightly higher. The JOLTS report, that's the job openings report, was out, and another reading on a strong labor market. That offset some hawkish news from overseas, including an annual PPI number for the Eurozone of 37%. The market broke higher later in the morning with no news to prompt it. As the market came to the end of the day, sideways action returned ahead of the Wednesday Fed day. S&P 500 closed up 0.5%, Dow up about 0.25%, and the NASDAQ much quieter than Monday, 0.25%. Fed Day, Wednesday, I spoke with some of you this week about the 1990s when Alan Greenspan used to run across the streets of the Federal Reserve Building in Washington. The business media used to evaluate the thickness of his briefcase to forecast if there was going to be a rate hike and how much. These days, we're grateful the Fed is pretty clear about what's happening, and this was no exception. Jay Powell has been telling everyone who would listen that they would be raising rates by 50 basis points and start to reduce the balance sheet to the tune of $95 billion a month. So, no one was surprised by that news. Initial reaction was the market happy that it was not a negative surprise, and we saw new highs on the day. But the real fireworks came, as I've told you, during the press conference. Powell's prepared remarks were not market moving, and most of his answers to the Q&A were not quite moving either. Once a question about the question about possible 75 basis points increase was asked and answered, it was rushed to the other side of the boat. Powell indicated that the committee is not looking at 75 basis points and that 50 basis points should do this month and at least a few more months in the coming months. Off to the races. After a jittery market earlier in the day with the inflation that is way too high comment by Powell, the supposed removal of the 75 basis points from the mix had the algorithms going nuts to buy. The stocks recouped all that the markets gave up last Friday and ended just off the highs for the day. Just to clarify, the market jumped. Dow up 2.8%, the S&P 500 up 2.99%, and the NASDAQ was up 3.86% on the news that we've been talking about for weeks. But, as I've said, the markets were worried about some hawkish surprise. So we've been listening to the talking feds, the Fed governors that have been talking about being more aggressive, and a few of them talking about the real possibility of a 75 basis point hike. So, as that was currently taken off the table, by the way, words are an interesting thing. Powell said that the Fed was, quote, not actively considering raising interest rates by 75 basis points. They are not, quote, actively considering. That is not the same as not considering, is it? Now, I don't think they'll be able to be as aggressive as they think, but being careful of the words that they use, like watching that briefcase, may give you some hints. After that move on Wednesday, all the talk was over. Is the selling over? Copper was strong, oil was strong, gold rallied, the dollar fell a bit, and as the Fed said they were raising rates, the yield on the 10-year declined. Remember, the markets are doing a lot of the Fed's work for them, so we'll see how much is baked in. Thursday answered the question about the selling being over. Nothing is over until we say it is, at least not for now. No, the market opened heavy and all Wednesday's gains were gone by noon. There was pretty well nowhere to hide. Dow was down over 1,000 points or 3.12%. S&P 500 down 3.5%, still about 41.46. Remember those numbers we talked about last week. They're not holding strong, but the trading range does seem to be intact. The NASDAQ was down almost 5% or 650 points. Even the biggest and the strongest companies got thrown out. Meta down almost 7%. Amazon another 7.5%. Microsoft was down 4.4%, and even Apple was down 5.6%. Caterpillar down 3%. JP Morgan down 2.5%, and even Home Depot was down more than 5%. Over 90% of the S&P 500 declined on the day. The 10-year was back over 3% from the open. Stocks gapped lower. Economic data was mostly disappointing in the U.S. and overseas. Jobless claims were higher than expected. Productivity was lower. Wage costs were up. Worries emerged again about stagflation and growth rolling over. Stocks did bottom out and attempted to stabilize in the early afternoon, but no meaningful upside. Stocks made new lows, then a slight bounce into the close. While there was no meaningful reason for the major rally on Wednesday, there were similarly no major reason for the level of selling that we saw on Thursday. There were some negatives. Tech earnings were bad. The Bank of England hiked rates and warned of a slowdown. Former Vice Chair Clarida said that the Fed funds will need to go to at least 3.5%. Economics numbers were bad in the U.S. and China's economic numbers were pretty ugly as they defended their lockdowns. Overall, these things were bad, but not new enough or bad enough to warrant the selling that we saw on Thursday. But this market is not feeling well, and this kind of action shows it. The market sets up for the jobs number on Friday. Friday set itself up early, bouncing a bit around the flat line in the pre-market, and there was a lot of talk about this jobs report. A bit above estimates on the jobs growth, the unemployment rate was pretty close to as expected, and the rate of growth in the wages was up about as expected, 5.5% year over year. A lot for people to talk about, but in itself, these numbers were not moving the market. For the day, the Dow was down about 1/3%, S&P down about 0.5%, the NASDAQ was down 1.4%. Even after starting off with 3 straight winning days for the week, all of these averages closed lower on the week. We're seeing the rate talk spook this market, but as I've said in the past, valuations don't matter until they do. Odd that now is the time that the pull forward demand, close quote, is the talk of the season. I remind you, this is not new. We have pulled forward a lot of demand, but we also have a huge amount of pent-up demand that will continue to be strong as the world reopens. Looking into this week, what will things look like? Normally the week following jobs week has been a quiet week. That was before we watched inflation news so closely. So today will be a slew of earnings, including BioNTech. So expect some commentary on COVID, along with Atlanta Fed President Bostic will speak. Tomorrow, Tuesday, we'll hear from Peloton and really hear about the pandemic play that has fallen. Along with Roblox, the metaverse name. We'll also get a small parade of Fed speakers. William, Bostic again, Barkin, Waller, Kashkari, and Mester. As I mentioned, first of all, not all of these are voting members. Second of all, if you think their talking points are just off the cuff, think again. These are being made to chum the waters or float some ideas to get the temperature of the markets. Either way, they will move markets in the short term. We have a pretty good handle on what the Fed's actions are in coming months, so don't let these guys change that. All eyes will be on Wednesday and the CPI. This, of course, is the measure of consumer prices. This will move the market. It will be a big number. That much we know. This may be the first big number to figure in the war in Ukraine, so watch out. But if it's not bigger than feared, we can see some relief. But if it is bigger, without extra commentary, watch out. 75 basis points may just come back onto the table. We'll also hear from Rivian, the darling EV maker that Amazon and Ford were big investors on, and supporters of that news and supporters of. News broke over the weekend that Ford is selling 8 million shares of their holdings in Rivian. Now, if you jumped back on that headline, as always, just remember, it was written to make you take notice. Should you take notice? That's 8 million of their 102 million shares. I'm just saying, headlines can mislead. Thursday will be PPI as well as unemployment claims as usual. Friday, the Michigan Consumer Sentiment Index. Make no mistake, the path of least resistance is down in the short term, but stocks are oversold, so watch out. They can get more oversold, but at some point the market will have priced in too much negative, and the bounce from there will be strong. We don't know when and we don't know how strong, but last week showed you the volatility is not over. Remember, please try to separate the signal from the noise. I spoke about this in a past video. If you want more information on that, of course, please let me know. Please remember this Monday video is just to keep you in the loop on what is happening on the front lines of the market. We need to keep our eyes on the long-term goals and the plans we have to achieve them. Check out our video on Fridays, our planning video. Last week we talked about a way to take advantage of this down market. Check it out if you missed it. Please, as always, call me with any questions. We'll stay nimble and watch the moves in this market, and I'm always happy to discuss them in more detail, and I'll keep these videos up to date too. Come back on Friday for the Friday the 13th planning video. Until then, have a great week.